If you don't know the rules of the game, how are you going to win? Let me tell you, you won't unless you happen to have luck on your side like Spencer Johnson, and I'm still trying to figure out how he keeps winning those games. Anyway, back on topic. I personally grew my credit score to over 800, and I think the highest my score has been was 804 for like a brief moment, but full transparency here, my credit score is currently at 775 with Experian, a 786 with Equifax, and a 771 with Transunion. And listen, I'm not here to brag about my credit scores. My point in sharing those is to tell you that if I can do it, then you can do it as well. So let's get straight into 5 small changes that you can make to improve your credit score forever. My first tip is to get started now. If you don't take control of your credit, then no one else is going to take control of it for you. Achieving a credit score of 800 plus isn't going to happen by chance. You are going to have to aim for it and make intentional actions and steps towards achieving that credit score. For some of you, getting started may be opening your first credit card, and for those of you who already have some credit, this may mean getting to know what's on your credit report. I know that this sounds a little cliche since I am a credit card content creator, so of course I would recommend opening up your first credit card account, and luckily for you, I can help to point you in the right direction so you don't open any of those terrible credit cards from issuers that just want to suck every dime that they can get from you legally with unnecessary annual fees, maintenance fees, printed statement fees, credit limit increase fees, early payment fees, and my favorite one of all, an account opening fee. And no, I am not exaggerating, this actually exists. Some of the best beginner credit cards include the Discover It Cashback credit card, and if you're a student, you can go for the student version, and there's also the Discover It Chrome card, which is a secured credit card. Another good entry-level credit card that is new to the market is the Chase Freedom Rise. Now, with this one, I suspect that Chase is still going to be a bit more picky than Discover, simply because they state that your chances of approval can be higher if you have a checking account with them with a balance of at least $250 before applying. One final credit card I'd recommend for those just getting started would be the Capital One Quicksilver One, which is a secured credit card. Now, be warned, because Capital One is known to put those with this card into a bucket, which means that people usually have a very hard time getting a credit limit increase from Capital One, and when they do finally get a credit limit increase, is usually a small increase. Keep this one as a fail-safe option. Getting your first credit card as soon as you are able to is very important, because the length of credit history on your credit report accounts for 15% of your score, and that's a total of approximately 127. Wait, do I refer to those as points? Are they points? No one says my credit score is 800 points, right? So anyway, the earlier you start, the better off you'll be as far as it comes to length of credit. If you're interested in either the Chase Freedom Rise or Discover It Cashback credit card and you'd like to support the channel, feel free to use my referral links down below. Congratulations, you got your first credit card and you're on your way with your credit journey. Now that you have your first credit card, do you know what that means? You get to have a new monthly bill added to your life. I know that sounds terrible, but all you're trying to do here is play the game so that you can get that excellent credit score. So this tip is going to be the most important one, and that is pay your credit card bill on time every single month, because you don't want to miss any payments. This category carries the most weight out of all of the categories used to calculate your credit score, as it accounts for a whopping 35%. And you know what? That still sounds kind of low, so let me put an actual figure to that. You can have a credit score as high as 850, so 35% of 850 is about 298. This means that if you screw this up and get a 0 in this category, and God knows I hope it's impossible to get a 0 in this category, but if you happen to get a 0, the highest score you will be able to achieve is about 553, and that's a poor rating. So you don't want to screw up here. Forgetting to pay a bill can have a major impact on your credit score. To prove this to you, I'll show you this FICO score simulator tool I have with Experian, and no, Experian is not a sponsor of this video. I just happen to use their app. But hey, Experian, if you're watching, feel free to hook a brother up. Once again, my credit score with Experian is at 775. If I forgot to pay a bill, according to this score simulator, my credit score would drop a total of 80 points. That's right, 80 points just for forgetting to pay one bill. I have over 10 years of on-time payments and over $60,000 of credit available to me, but none of that matters if I forget to pay just one bill, and if I don't pay any of my bills, my credit score will drop to 640, which means that my credit score would drop by 135. And this is just one time of not paying any of my bills. However, if I continue to make on-time payments over the next 3 months, months, then my credit score can increase by 5 points to 780. So treat your credit card as cash. If you don't have the cash in your bank account, then you don't have the money to spend, so that means avoid using your credit cards during those moments. That way, you're never going to be in a position where your account balance continues to grow and gets out of hand, and all of a sudden you have to pick and choose which bills you want to pay. Credit card interest is serious business, and we want to make sure that you avoid needing to worry about credit card interest in the first place. Since we're on the topic of not missing any payments, let's talk about how you should use your credit cards. To build upon what I mentioned earlier, you'll definitely want to keep your credit utilization low, because this category carries the second largest amount of weight when calculating your credit score, as it accounts for a total of 30% or 255 points. Credit utilization is simply the amount of your credit limit that you're currently using. So if you have a credit limit of $1,000 and you spent $1,000, this means that your credit utilization is at 100%. If you spend $500 on that same credit card, then your utilization will be at 50%. What you want to do is spend less than 30% on your credit card. And I know that may sound confusing, because after all, why would the bank or credit card issuer give you a credit limit of $1,000 if they don't want you to use the entire limit? You see, this is one of the hidden secrets about the credit score game that the banks won't tell you. Once you exceed a 30% credit utilization on your credit card, that begins to send red flags to the bank, because all of a sudden they begin to view you as a very risky customer. After all, the bank wants to lend to someone who is going to be responsible enough to pay their bills, and for whatever reason, they believe that people who use their credit limit by more than 30% are less likely to pay that balance back. And when you think about it, there are people who are able to get credit limits of $30,000 or more, so 30% of $30,000 is $9,000, and it's much harder to pay back $9,000 than it would be to pay back a few $100s. Now, this does not mean that you can't ever exceed 30% of your credit limit. I've done this many times without negatively impacting my credit score, and the reason why it did not impact my credit score was simply because I paid that balance before it was reported to the credit bureaus. In other words, I paid that balance off before the statement closing date. Now, I know that I probably said a lot that you don't understand, so I recommend watching this video linked above and in the description section, where I break down the terms you need to know about your credit card statement and share tips on when to pay your credit card bill. This next tip is pretty straightforward in my mind, but it's not necessarily straightforward to everyone, especially if you're new to credit, and that's simply avoiding multiple hard inquiries and opening multiple new accounts. This accounts for 10% of your credit score, or 85 points. So it won't have a huge impact on your credit score, but it still counts and holds enough weight to keep you out of the coveted Club 800. A hard inquiry or hard pull occurs when you apply for a new line of credit, such as a new credit card, an auto loan, a mortgage, personal loan, etc. This means that the creditor requested your credit file to determine your level of risk. A hard inquiry can also result from requesting a credit line increase depending on the bank or credit card issuer. Until recently, requesting a credit limit increase from Chase always resulted in a hard pull, and that was the most annoying thing ever. So when you are deciding on your first or especially your second credit card, I highly recommend going with a credit card issuer that doesn't require a hard pull to determine whether or not you qualify for a higher credit limit. Now, it has been reported that Chase has softened up on this rule a little bit, so be sure to do your research. Now, I started my journey with Discover, and every single credit limit increase that I requested always resulted in a soft pull, and if for whatever reason they needed to take a closer look at my credit report, they notify me before moving forward with a hard pull. I've never been prompted for a hard pull, and my credit line was increased from an initial limit of $1,000 all the way up to $32,000 over the years. Hard inquiries will show on your credit report for 2 years, but they really only impact your credit score for 1 year. I recently had a hard pull turn a year old on my credit report, and my credit score increased by 7 points as a result. So yes, I'm on my way back to Club 800, but I'll probably end up opening a new credit card account before I even make it there. Who knows? Now, I know that this is going to sound like I am completely contradicting myself, because I just told you to avoid having multiple new accounts, but in order to really cross over into Club 800, you want to have a good mix of credit. This is true, and this is the reason why I've dropped out of Club 800. Having a mix of credit means that you have different types of credit accounts, and according to Experian, the number of bank issued credit card accounts, installment accounts, and revolving accounts are taken into consideration for this category. Of course, I don't want you to go crazy with this, because remember, you don't want too many new accounts. For me, when I entered into Club 800, before I was kicked out of Club 800, I had 2 credit card accounts and 2 installment accounts. One was for my car loan and one was for my student loan. That's a total of 4 different accounts I held, and those accounts were on my credit report for I believe somewhere around 7 years for the oldest one, and at that time I was very conservative with how often I was opening new accounts. To put this further into perspective, I took 5 years between opening my first credit card and my second credit card. Now 5 years is a bit overkill, but at that time I was clearly not interested in the credit card game at all. My point is, be a little conservative with building up that credit mix, and remember that this is a marathon and not a sprint. But this is pretty straightforward, so I won't dwell on this point any longer. With that said, let's move on to the bonus tip. This circles back to my first point with getting to know your credit report. Mistakes happen, and when there is a mistake on your credit report that negatively impacts your credit score, you have the power to dispute that mistake, and it is going to be very important for you to do so. Some mistakes can really cost you a lot of points. Having a mistake of a missed payment when you actually made that payment on time can literally be the difference between having fair credit or good credit. So make sure everything is right on your credit report and dispute anything that is wrong. If you want to learn more about your credit card statement and how you can use that to increase your credit score, be sure to watch this video next. And as always, thanks for making it to the end of the video, so come on over and get your high five.